And we've also got another gap here, which is what we would call a continuation gap. In other words, continues in the same direction. If we saw another gap, we'd expect that to be an exhaustion gap. Normally the third one would be the exhaustion gap, which would end that move. And a continuation gap, it tells us the trend is not yet over. It continues a trend in a particular direction, often occurs on high volume. The strategy really is the bars have been in a strong trend. The price jumps in the direction of that trend. The volume on it must be at least double the average, preferably more. Otherwise, it would just be a common gap and we'd want to leave it alone. The real difference between a common gap and a continuation gap is volume. That's it. So we really aren't going to be looking at placing many gaps unless there's decent volume. So really volume is the measurement here with gaps. Otherwise, it could just fake in the opposite direction. We're going to buy and sell on the close of the continuation bar and again use our trailing stop loss strategy that we've established before. Again, we can use this as end of day or intraday trading. Again, simple continuation gap is the following. Here's your move. Here's your uptrend. Here's your gap. Notice the volume play here. And we'd only look for playing any of these gaps when the volume's pretty decent. Otherwise, it can obviously fake us out.
Craig, when you say intraday and end of day, do you mean currency, stocks, the whole lot?
Yeah, I mean intraday meaning we would be looking, the chart we're currently looking at here could be a 60-minute chart for an intraday trader. So in other words, it all applies.
Yep.
When we look at bars, we shouldn't really call them days. We should just call them time periods because it really could be a 60-minute bar or an hourly bar, or it could be a daily bar.
And it will work potentially across currencies and stocks and spread betting and...
Yeah, you got it. Yeah, multi-instrument. So look at some examples there. This is Northern Rock gapping up in an uptrend. So let's have a look at that particular gap move. You can certainly see here's the gap up, caused the move, and it continues to continues to run north. Let's have a look here at Renshaw. Continuation gap here. Let's look at some practicals now. See if we can find a continuation gap continuing in the direction. Vicky, I think you've spotted it, haven't you?
Sort of mid to late-ish June.
Okay, you've got mid to late-ish.
Probably. Well, where it says June, July, there's a huge volume bar.
Oh, there's brilliant volume there. Absolutely. Yep.
And continuation from the earlier gap. I'm thinking.
This is great. There's certainly a good gap here. There's little gaps here, but the volume on these ones isn't great, is it? But the volume's not great. The volume here is great.
Because there's an earlier gap as well on that one, and then it consolidates, and I read that as a continuation gap.
Yeah. What about Google here? Chris?
And on the left, what's that? The second of the second, 2000.
That's it. Bit of volume, continues down. Yeah, Nathan?
When we say continuation gap, does it need to be two gaps or just one?
It doesn't matter as long as it's in the trend which has already been established. The difference between a breakaway gap and a continuation: a breakaway, consolidation, no direction, gaps up on volume, starts a movement in a direction. That would be a continuation gap, and that could be up or down. Okay, that would be a breakaway gap, which is consolidating sideways, bit of volume, and we start a direction. Okay, a breakaway gap is different from a continuation gap in that a continuation gap is already moving in a direction, trending up or down on volume, and just continues that trend. Does that make sense? So the one starts the move, that's the breakaway gap. The continuation move does exactly what it suggests. It continues the move. They're both on volume. If they aren't on volume, they could just be common gaps, which basically mean nothing. Could be changing direction.
Breakaway, there's consolidation, and then there's a gap.
Yeah, really no direction. That's what it really means.
Okay.
So there's no real trend set yet. In other words, it's really starting a move off.